All right, guys. Good morning. Good morning. Hope you guys are doing well. Today, we got core PCE inflation data. It's the biggest inflation report. It's the biggest economic report of the week, really, is today. So we'll see how that goes. I'm ready for it. Expectations, we're going to put those up. We'll put those up on screen and get you guys ready for it. My portfolio honestly looks really, really good today, man. We're up we're up like $300 this morning. Mostly driven by this big, like again, I tried to tell people this yesterday and nobody really listened. Is the Q up or down this morning? Let me see. It looks like it's up. You know, I tried to tell people this yesterday, and like one of the things that nobody really wanted to hear was that, generally speaking, when we gap down this much, we're gonna bounce back. Like that's how it goes. Like if we gap down this much, we're almost certainly bouncing back at least a little bit, right? And that's kind of what we're seeing now. Like we had this monstrous gap down and downward pressure over the last few days, and now we got a little bit of a rebound, a little bit of a resurgence here. If you look at like the SPY, for instance, I'll put like a 10-day chart up. You know, yesterday we bounced back. We're green in pre-market this morning, very green this morning. Again, PCE inflation data comes out. We had a lot of other news releases this morning. They say Apple is going to make iPhone 16 and Pro Max models in India this year, according to money control citing sources. We had 3M release earnings this morning. We had a couple earnings reports this morning too. Let's talk about those. Right, so we had 3M, Bristol Myers this morning. 3M posted 193 EPS versus 168 estimates. Revenue of 6.3 billion. They expected 5.88 billion. Fiscal year EPS came in at 730 versus 717 expected. Previous of 730. So 3M had pretty good results here, earnings wise. So here's 3M, and yeah, 3M is gapping up some, so not a shock. You know, 3M making some moves here. Again, Nvidia back up to 114s. It went as low. It went as low yesterday. I remember yesterday it went as low as 106. So is this the big correction that the market needed? Is it time to bounce back? We might do a poll asking that. I don't know. Let me know what you guys think. Core PCE inflation data is the biggest inflation. Yeah, so this is the biggest inflation report of. Core PCE is expected again at 0.2% month over month and 2.5% year over year. This is a massive market report, and we will cover the full reading live as soon as it drops at 8:30. Right here. So be ready, guys. Massive report. Currently up $600 from KO. Yeah, I have KO too. When did their earnings drop for KO specifically? I'm in Coca-Cola. When is their earnings report here? Let me see. Again, today's a huge day. Yeah, a huge day. When was Coca-Cola's earnings? So Coca-Cola earnings just dropped already. What did they show up as? Let me see. I'm in KO right now. When did KO earnings drop, though? I didn't see it. Bank of America, European equities. Checking up the other news today. Yeah, we got a lot of other news today. Citi says by Q4, it sees copper back at 9,500/T and rallying further to about 11K/T by early 2025. And so Citi thinks copper is going to be bouncing back. Just in terms of like futures, if you want to see what, you know, Bank of America flow shows 22.2 billion into equities, 16.1 billion into bonds. 1.3 billion into gold and 1.2 billion into crypto. 42.3 billion out of cash. So I wonder if a lot of other banks and other stuff are buying stuff up after this big drop. All right, so the ECB sees inflation in the next 12 months at 2.8%, 3-year ahead sees 2.3%. They see inflation in 12 months, 2.8. You got the European movers this morning. Yeah, not always. Like, we don't always get an indication, though, of, like, what stocks are going to do pre-PCE. Like, I think things were just down so much yesterday that, like, it's not a shock. So, yeah, Coca-Cola posted on the 23rd. They posted second quarter revenue of 12.4 bill. 12.4 billion. I don't know what they expected. Yeah, so Coca-Cola posted 84-cent EPS versus 81 as expected. Sales of 12.4 beat 11.75 estimates. So Coca-Cola did report on the 23rd and beat most metrics here. What did it do, though? It looks like it gapped up on the 23rd. Yeah, so, okay. Yeah, so Coca-Cola had a pretty good reaction. And I'm in Coca-Cola. My average price in Coke is $52, roughly 52 bucks. We also bought Southwest yesterday at an average price of 25. Southwest is almost up to 28.50s this morning. We also bought Meta. We are now almost green in Meta, but basically flat. We also bought a couple things. Microsoft. We're red in Microsoft, but that's okay. We bought a bunch of different stuff that we're kind of neutral on. We're very green this morning, surprisingly enough. What do we buy? Yeah, we bought Meta. Palantir, very nicely green. Coca-Cola, very nicely green. Southwest, we're very nicely green. We added to something. We added to Google. We're green on that one today. Delta, we're green. CVS, we're green. Salesforce, we're very green on. Apple, we're very green on. Chewy, we're very green on. Baba, we're slightly green. Tyson Foods, we're green. Our T-bill position's nicely green. SoFi is flat. Snowflake bounced like a lot back yesterday also. My average on Microsoft. We're down on Microsoft right now. We just bought it yesterday. My average price is $428. It's at $421. So Microsoft definitely dipped yesterday, but Microsoft is kind of a long-term position, to be honest. Like, we bought it yesterday when it hit 420. We bought it yesterday in pre-market, and it dipped a little bit yesterday. But again, like, my plan is just to add to this as it drops. I like Microsoft as a company, and Microsoft has dropped, you know, it hit highs of about 470 a couple weeks ago, you know, so it's pulling back all the way to 420. That's a big percentage dip. I don't mind adding to it and just holding long term, although it's not a monstrous position or anything like that. Like, it's a relatively small position. Again, we're up about 300 bucks today in stocks, so. You said that it would be green today about the Bulls have the edge, something like that. Yeah, I think I said that the momentum would be on the upside. And that's not a shock, right? Like, anytime, and again, this is something that I told somebody yesterday, and they were like, and they didn't understand it. But what I said was like, look, if something gaps down significantly or has like a really red day like this, right? Like, I look at like the rookie trader mindset, and then I look at the experienced trader mindset, right? The rookie trader mindset is going to see this red action here and say, hey, that's super weak. Let's try to short this and ride it down more because it's weak right here. And again, that's a rookie trader mindset. An experienced trader is going to see this big gap down like this and say, hey, there's some deep extension right here that I might be able to take advantage of. And so the experienced trader is going to say, hey, let me buy this dip, ride a bounce. Even if it continues in this direction, right? It's usually at least going to bounce a little bit like this. And so it's not a shock. The more something drops, and especially if it's a really healthy company, like a legacy company or something like that, the more I'm likely to buy it, the more willing I am to buy it. I always start small, and then if it continues to drop, I'll add a little bit more size to it. But I haven't really, but I don't take crazy amounts of risk. Like, I'm in Nike, you know, we're down on Nike. And I'm not adding to this one anymore. And no matter what happens, I'm gonna be fine with Nike. But I think it's just a waiting game. It's a patience game. Nike is down a huge amount. A huge amount. It was at 110s to start the year. It's at 71 cents, so it's down over 30% right now. And so we're hoping it bounces back, and if not, we'll just have to cut it. If it starts to break under, like if Nike starts to break under like $60 a share, yeah, we're about to get out. But who knows? We'll see. What do you guys think? Building a large position in Google. Yeah, I did add to my Google position yesterday. I think I'm still kind of green. No, I'm still kind of red, but it's pretty much like flat. I don't mind adding a little bit more to it either, to be honest. Yeah, we just added a little bit more to it, just to kind of like look. It's a very small position. I like Google long term. I believe it pays a good dividend too. 20 cents a share. PCE will affect everything. So PCE is inflation data, right? So personal consumption expenditure is inflation reports. It's the inflation report. It's the biggest inflation report that we get outside of CPI, I would argue. Personal consumption expenditure index data can wildly influence everything from tech to the broad markets, especially blue chip healthy companies in the S&P 500 index funds, NASDAQ index funds, Dow index funds. Those are going to have a huge influence from PCE data, right? So PCE data drops at 8:30. We'll put a timer up for this as well. It's something that we forgot to do. We will put a timer up. And it drops in about an hour and 22 minutes. So again, a huge report. We'll see how it goes. SPY's still up pretty nicely today. NVIDIA bouncing right at that 200 EMA. Somebody asked me why we watch the 200 EMA. This is why. Like, look at this bounce directly off of it. Like we literally touched exactly the 200 EMA, bounced directly off of it. Looks good. For your Nike example, what's your general rule of thumb time to get out? You said 60. How do you decide on that number? Decline or other data? Why not hold? Yeah, I mean, and there's a chance that I would hold even if it hit it. But I think I think most blue chip healthy companies are going to be fine in that you'll be able to long-term hold them indefinitely, right? But the question I have to ask myself is, do I feel like locking this much money up in Nike for 4 years or 5 years or however long it takes for Nike to bounce back? The other problem is that Nike is a fashion company. And so this is a company that, number one, I'm not as willing to hold it long term. Go back to my Lululemon argument. I'm not as willing to hold Nike long term as I am with other companies, right? I'm just not. I'm not as willing to hold Nike as long term as like Apple or Microsoft or big boy companies like that. And Nike's a big company. It's a legacy company, of course. It's a big fashion company. But even I'm just not willing to hold fashion companies long term, not with the sizing that I'm currently in. Like I'm not down to anything super big. And I'm not risking anything with the size. But with that said, like in order to keep a balanced portfolio, I don't want to take unnecessary risks. I would rather just like if Nike breaks under $60 a share, what I would probably do is just cut most of it and then hold on to a piece of it, right? And that okay, so an example of this is like right now I've got 80 shares of Nike. If it breaks under 60, I'd probably cut like 50 of those shares. Hold 30 shares. And then if it does eventually bounce back, there's a big chance that I'm going to make my money back and it's just going to be like a risk-free trade. Like I'm going to eventually make my money back with those 30 shares. My risk is noticeably less though. I don't have to worry about it as much and I need to limit my size, So that's that's what I look at. It's all about risk management, I think. And when I'm holding something long-term, like generally speaking, if something drops enough, I will buy it. If it's a healthy enough company, I will buy it up and sit on it. Nike, I think, has a little bit extra risk, though, because it's a fashion company and holding fashion companies long-term. Trends change, fashion changes, interest changes. The brands that people love and use change over time, and generationally they change. So holding Nike for 30 years is a risk, right? Now, there's still a big chance that Nike's going to be on top of its game in 30 years, but it's certainly not a given. I would say it's safer than something like Lululemon, right? Where Lululemon is kind of like a spur of the moment fashion brand that everybody from the pandemic wore sweatpants, and so they flocked to the Lululemon. Now that the pandemic is done, that style is eventually going to change, and Lululemon's going to be in trouble. People aren't going to buy them as much, especially with how expensive they are. And so that's number one. But still, even though Nike is safer than that, it's still risky. Anyways, PCE data coming out at 8:30 Eastern time, guys. Be ready. Yeah, I day trade futures, I day trade stocks, I day trade a bunch of stuff. Yeah, where's Tesla at this morning here? So there's 3M. 3M did drop earnings. It's actually breaking highs. Tesla all the way back up to 224, and I am in Tesla also. So that looks good. A lot of the stuff I was read on yesterday has bounced all the way back, and now I'm basically flat in a lot of it. This includes Meta. I bought it yesterday, bounced all the way back today. Microsoft. What else did I buy? I think I added to some stuff. Disney is back up a lot today. Yeah. Southwest, we bought Southwest. We took a lot of profit off of it already. Our average price is 25s there. I still like Tommy Hilfiger and J. Crew. Right, but those aren't like, that's subjective, right? Everybody has opinions. A lot of people probably still like bleached jeans. You know, like people tend to get like an interesting thing that you see a lot happen with older people, and maybe it'll happen with me too, is that generally speaking, style-wise, a lot of people get frozen in their style. You know, what do I mean by that? Is like, look, my stepdad just passed away. R.I.P. Great man, honestly, great guy. Was really patient with me as a young teenager. You know, I'm sure that was difficult, and I was a little jerk, and he was really nice, patient, always good to me. But with that said, you know, I love him. Rest in peace, Stan. Good dude. You know, he dressed like he was in the 80s, I could say. Like, he had a mullet at some points in time. I loved him, but he had a mullet at some points in time. He would wear, like, holy jeans, and he just looked like he was out of an 80s music video. So I think people get frozen in their fashion, right? But I don't know if that's enough to prop up those brands long term. You know, that's the same reason you see people, like, a lot of people get frozen in their music taste as well. So what, like, an example for me is, like, in the early 2000s is when I was, like, young, like, my prime teenage age is early 2000s, right? Like, I wore a lot of, like, Abercrombie and Fitch and Hollister and slightly baggy jeans. I would say it actually kind of mimics the style now today. Nvidia bounced it back up. It's at 115. The SPY is back up to 540s. Let's see if we break highs again. You know, the question is this gap up a move from, and let me do a poll. Is this gap up a move from institutions knowing what the data is going to show up as? Or is this move up just a bounce from the previous weakness? And again, I'm going to go back to the previous story. I think it's expected at 0.2% expected reading. All right, vote on the poll higher, lower. Let me know how you feel here, chat. All right, guys. So again, vote on the poll. The poll says that today's core PCE data show up higher or lower than the 0.2% month-over-month expected reading. Anyways, going back to the point. Right, when I was cool, or when I was young and cool, I would always wear like Abercrombie and Hollister, and what really, again, it's whatever the ladies liked at the time. Like whatever the girls liked, that's what I'm wearing. You know, if they like pink bunny suits, I'm throwing a pink bunny suit on and being like, "What's up?" You know. But with that said, eventually I grew out of that. But I think depending on what time that hits your age, I don't know. Do you still wear clothes that were cool when you were young, guys? For my older people out there, let me know. Abercrombie. Yeah, well, Hollister, in hindsight, it was really cringy, to be honest, right? But this is the time. This was the time. Listen, early 2000s were a different time. You had spiky hair. You had a bunch of wristbands being cool and ankle bands and all this stuff, right? You had a bunch of, like, like seashell necklaces and boy bands and all this stuff. My wife and I were watching Dirty Pop about boy bands. Good Netflix documentary right now. But yeah, it was a different time. I was kind of a skateboarder, to be honest, right? So I was more of like a skateboarder, like baggy jeans and like etnies and DCs and like that type of stuff. I still wore preppy clothes because that's kind of what girls liked at the time. But yeah. Yeah. They'll probably take the lows and go higher or vice versa. I wear Kmart. Hey, do your thing, man. I'm not mad at that. Yeah, Abercrombie is one of the most ridiculous stocks. Speaking of Abercrombie, like, the problem is that nobody really knows. This is never going to hold, and if I could short this, I would. All right, this is never going to hold. It's not justified. If you go to the mall, you can go to the mall on the busiest freaking day of the year. Barely anybody's going to be in Abercrombie. No, like, have anybody seen the clothes that they sell there? They look ridiculous. Like, I don't know who's wearing Abercrombie and Fitch clothes right now. They look absolutely ridiculous, you know? Like, the last clothes that I saw at Abercrombie were, like, fishnet coats. Like, I just can't get behind it, you know? Like, for men, and again, I'm not judging. Wear what you want to wear, you know? Maybe I'm not cool. Maybe that's true. But yeah, I just can't get behind it. Nobody's ever there. I don't even see. Last time I went there wasn't even an associate there. Like, nobody even was there. So I feel like what's happening is that they've got some weird short squeeze that all the stockholders are trying to ride up in Abercrombie and Fitch. Right? Everybody's trying to ride this up. And so they're making all this money from their stock price appreciation. And so they're opening up stores just to look like they're using the money they make in their stock price to try to build their brand, but they're never going to hold, they're never going to survive. Like, nobody buys from them anymore. And so the stock price going up hundreds and hundreds of percent in less than a year is crazy. It doesn't make any sense. It's up to $150 a share for Abercrombie. And I know we're going to have somebody, because this always happens, that's like, hey, I still buy Abercrombie and Fitch. And I know that might be true. But you're not going to prop up their business, you know. It's weird. It's strange. I know it's a short squeeze. And I know it's kind of similar to GameStop in that regard, where so many people understood the weakness of it that they shorted it, and then those shorts got squeezed out. But yeah. Jinkos, yeah. I had some Jinkos in elementary school, you know. Jinkos, I'm not that old, right? Like, I wore Jinkos when I was like a little kid, mostly. By the time I was a teenager, Jinkos were not cool anymore, you know. Jinkos, I had some cool Jinkos with an alien on them. I used to get to wear them for Free Dress Friday. I had a wallet chain, you know. I had spiky hair, man. I was just the coolest kid ever in 4th grade, you know, 5th grade. Do you think it's better to buy now or after reports coming out? I don't think it's better to buy before the report. I think nobody knows what's going to happen from this report, and so we could get any type of crazy big move, anything, and, you know, nobody freaking knows. I would be very careful, you know. Yeah, this PCE report's big. It's a big report. It's very relevant, and it can move markets. And so if you take a big position now and PCE comes in backwards, it can really negatively impact your position. It's just a gamble. Of course, if you guess it right, you might have a big positive move in your holdings. But I don't think there's I don't think there's any edge. I think it's a coin flip, and I think there's no reason to get in positions just because they make your heart flutter and they make you all excited and butterflies. I don't think there's a reason for that. I think you need to just wait and understand that's a gamble. There's no reason to risk money like that. And if you're that addicted to gambling, you shouldn't be trading. You know, you shouldn't be trading. You know, you need to take a step back and find something else. But if you're smart, understand nobody knows what's going to happen. PCE could wildly hurt the market. Or it might genuinely help the market if it comes in super low. It's expected lower is better for PCE. And again, it's expected at 2.5% on the year for core PCE, 0.2% on the month for core PCE. Base PCE is expected at 0.1% on the month, and I believe 2.5% as well on the year. The big one is core. Core is the one that everybody watches, everybody pays attention to. That's the one that you want to watch. You want to pay attention to core PCE. You do not want to watch regular. I mean, you can watch regular PCE, but it's not going to be the influential one over markets. It's at 8:30. I use the EMA versus the SMA, but that's just my personal preference. Tommy is still around since a big corporation took over. Like I said before, people thinking that dip was a crash is hilarious. You know how it goes, bro. Like, okay, this is how it goes, right? Like, I'll draw it. I've been using it. I'm like John Madden over here. But this is how it goes. Okay, you got to move like this, right? The market goes like this, and as it's pushing up, people say we're extended, we're gonna crash, right? We're gonna crash, and then it pushes up more. Right? And then they get even more emotional by it. They say, oh, we're extended, we're going to crash. And then we push up more, right? And again, they're betting against the biggest long-term edge in the market, right? Like the biggest edge is long-term, we're going to go up in the market. Like betting against that is a sucker rookie bet, to be honest. But again, the shorts keep betting against it. They say, oh, we're too extended, then we go up again, right? And so at this point in time, they've made so many wrong predictions, they're desperate to be right. Right? And then we do something like this, right? And so it's music to their ears. They're like, aha. See, even though it's still freaking higher than when they made most of their predictions, they're like, aha, see, I was right this whole time. Like the ego gets in the way and they're just like, like I wasn't wrong. And you know, then the market does this and then it's just kind of like, all right. And maybe this is a cup and handle. I don't know. Maybe this is a head and shoulders. The point is though, long term, the market's going to do this. It might correct. It might come down to the biggest risk in all honesty, right? If we're looking at everything objectively right now, the biggest risk is simply that we have a long-term bear market. And what does that look like? You know, historically, the market can negatively trend against us for long periods of time. Historically, we could downtrend and have a bear market for almost a decade, you know? And so if you buy up stuff up here, which is not really what I've been doing either. Like, I haven't really been buying up stuff at the highs. If anybody's been watching my trades and my investments, really, I haven't really been buying up anything. I thought the market was too extended. I bought a little bit of stuff yesterday after these big pullbacks, but, you know, we'll see what happens. But I guess my point is, like, getting stuck in this is the biggest risk for investors, right? If you hold it long enough, eventually it's going to come back and go like this, right? But if you need your money within the next 5, 6, 7 years, if you get really unlucky, you're going to be SOL. Like, you're going to be out of luck. There's nothing you can do. And so, yeah. Just be careful. Yeah, big earnings next week. Next week is a ridiculously large week. Next week is probably the biggest, catalyst week that we've had in a long, long time, right? So next week alone, we have Tuesday, the JOLTS report. Also Tuesday next week, we have SoFi, PayPal, Pfizer, BP. Monday next week, let me go back to Monday. So next week we have McDonald's Monday morning, Royal Semi, Bank of Marin, CNA, Hope, Revity, Integra earnings, Lowe's earnings. We also have in the evening Tilray, Sprouts, F5, bunch of other earnings Monday morning, right? Tuesday we've got SoFi, PayPal, Pfizer, BP, Procter & Gamble, Merck, JetBlue, Philips, American Tower, S&P Global, a bunch of other companies drop earnings in the morning. In the afternoon, we've got AMD, Microsoft, Starbucks, Pinterest in the earnings in the afternoon. So we're going to be streaming earnings in the afternoon. Not only that, but on Wednesday, we have... Okay, so that's Tuesday afternoon, right? So in the morning on Tuesday, we also have the S&P Case-Shiller, CB Consumer Confidence, and the big one is the JOLTS report drops next Tuesday morning. The JOLTS report Tuesday afternoon. Wednesday is the biggest day of the week, where we got Boeing earnings in the morning, Norwegian Cruise, Wingstop, Kraft Heinz, Altria, a bunch of other earnings in the morning. In the evening, we've got Meta, ARM, QCOM, Carvana, a bunch of earnings, but also we have the FOMC decision on Wednesday. So we've got ADP non-farm employment in the morning, a bunch of earnings, Chicago PMI in the morning, the FOMC decision at 2 p.m., the press conference at 2:30, and then Meta earnings at 4, right? So we got all of that stuff going on. We also have ARM earnings on Wednesday morning. And then Thursday, right? So then Thursday, we've got jobless claims, non-farm productivity, ISM manufacturing data, as well as the biggest earnings report of the week, Thursday, with Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Square, Mara, and a bunch of other ones. And then Friday, we have non-farm payrolls and unemployment data, as well as I believe oil earnings, or maybe that's the week after that. So yeah, Friday, So Friday we have Exxon. Is this Friday? Yeah, so Friday we have Exxon, Chevron, Sundial. So it's just a crazy. I'm gonna be working nonstop. It's good and bad. I'm gonna be busy, but we're gonna have a lot of stuff to talk about. Yeah, definitely fun but busy. Yeah, we're going to cover Meta. We're going to cover all the big ones. We're going to cover Microsoft. We're going to cover all the big ones, right? We'll probably be streaming next week. Almost every afternoon next week, right? So next week we're going to be... like if we look at next week objectively, we're going to be streaming Tuesday evening for sure. Tuesday evening we're going to be streaming Microsoft and AMD probably. AMD is probably one of the big ones though, but AMD and Microsoft Tuesday. Wednesday, we're going to be streaming Boeing, Norwegian Cruise, Wingstop, Kraft Heinz, Altria, a couple other ones. We're also going to be streaming Meta earnings and ARM earnings in the evening, after the FOMC decision, that is. Thursday, we're going to be streaming Apple and Amazon. And yeah, Microsoft had a 10-year period. It stayed around $40 until it popped up just 5 years ago. Same with Facebook. Right, for sure. And that's how the market goes, right? Meta has earnings next week too. I'm going to probably, I bought a couple little dips for swing trades. I don't know if I'm going to hold all of them through earnings. And what I might do is instead wait for the earnings to drop and cover. I might wait for some of these earnings to come out and try not to get stuck in the earnings reports. What do you guys think? Overall, though, the big question is, do you guys think this earnings season has a good or bad effect on markets? Good or bad effect on markets? Does this positively or negatively impact markets right now, chat? What do you guys think? All right, we got a little bit over an hour left until PCE data, guys. About an hour and 2 minutes left. About an hour and a minute. But... yeah, I mean, the other thing to consider, though, is when we look at a long-term chart, here's a weekly chart. A lot of these are up big, right? Apple doesn't look too bad because Apple's kind of pulling back. The $200 level is a major support level for Apple, right? So here's $200 for Apple. I think that looks relevant. Amazon, another one that drops next week. Amazon's looking a little bit better, 175. Amazon's such a powerhouse company, though. The thing about Amazon is that every single person in the US, for the most part, uses Amazon regularly, right? That's a powerful thing. That's a lot of power for a company. And I think because of that, they're going to be fine long term. Generally speaking, when anything has that much power, they're going to be fine, right? So Amazon, I think, is always going to be fine. You just got to wait for good moments to average into it. Google had earnings. We did buy some more of Google here. And I think we're flat on it. We're down a little bit. Meta, same thing. Meta's had a crazy year with AI. Meta got really, really weak back here when Mark Z lost $10 billion in the metaverse and everybody was scared and nervous. It caused this massive dump here. And again, to be fair, I was bearish and pessimistic on Meta. I thought that the metaverse, like, this was unlucky for Mark, right? What happened here, like, just to clarify. So what happened here, right, is that crypto games, the metaverse hype went up a lot in the years preceding this correction in Meta, right? So crypto games, the metaverse, online real estate in the metaverse, like all this stuff was really, really hyped up leading to this year. And then this year in 2021 and 2022, crypto corrected massively. Bitcoin dropped from, $65,000 highs all the way down to like 15,000 at one point in time. NFTs lost essentially all of their value. The metaverse got much less hyped, much less interest. And at the time, Mark Zuckerberg had invested billions of dollars into it, right? And he had lost $10 billion that year. That is what tanked Meta down to under $100 and made a lot of people, including myself, kind of pessimistic on it. My logic of being a bear, I wasn't ever shorting it, but I was scared to buy it. And the logic of being scared to buy it was this. I was scared to buy it mostly because, if you look at the trend of social medias, right, social media wise, and this excludes maybe like YouTube, right? But social media wise, what happens is that you have a social media that's big and popular and everybody's using it and everybody's having fun on it and it grows massively and whoever's the CEO gets really, really wealthy, right? And then after about a 10-year period, social medias have about a 10-year lifespan. After about 10 years on that social media, new generations sprout up. Kids grow up, turn into teenagers. They start using social media, but generally speaking, eventually, they want to use something else. They don't want to use their parents' social media. Like my social media page was Facebook, right? Like we always used Facebook when I was young. My kids don't want to use Facebook. They don't care about a Facebook. They want Instagram, which is Facebook owned. They want, Snapchat, really, which is one of the reasons I hold Snapchat is because young people still use them a lot. And so, I thought that Facebook was losing interest, even though Facebook and Instagram was losing interest. I thought that Telegram was looking bigger than WhatsApp as well. Like Telegram kind of started to gain some momentum over WhatsApp. I just thought that it was bleak. But again, what saved Meta really here is number one, AI, of course. Like they started producing AI systems. Number two is the Oculus picked up a lot of steam. Like my kids love the Oculus headsets. Their friends love the Oculus headsets. The Oculus Quest 3 is much better than the 2, and that has a lot of steam right now too. So I think they're going to be fine. But the question is, do they correct? I don't know. We'll see what happens with their earnings next week. Another one is MySpace. I didn't lose money on Facebook. I missed out on making money, but I didn't really lose money. Not like I never shorted it. I never really went long on it either, though, and that's a mistake. Obviously, in hindsight, Meta went up from $100 to $500. It's up 400+% right now. So, yeah, definitely a mistake. But anyways, Tesla, interesting as well. I'm in Tesla. Earnings are out. It's still over 220s. We'll see what the Robotaxi event shows for this one. It's a big time. It's a big day. And we'll see what happens. All right, guys. Meta. What's another one? Microsoft, another interesting one. Again, a lot of these are up big on AI systems, right? Here's Microsoft. Microsoft has corrected a lot, though. After this CrowdStrike thing, Microsoft dropped all the way down to 418s. We're down on Microsoft still, but we'll give it time. My portfolio's up over 300 today. So, that's nice. Where's Bitcoin at? But yeah, again, the question is Microsoft is, it started the year off at about 338s. Like what I mean by the year is 52 weeks ago it was at 338s. In 2024, it started off at about 370s. It's currently at about 420s. Big percentage moves already on the year, and the question is, can it sustain more upward movement? I don't know. I'm in it. I hope it does. We'll sit on this one long term. Yeah, Uber, you know, Uber is a very interesting company, I think. Right? I think it's mostly had its heyday where it's ran, but Uber changes the world, man. It really changes the world, and it has changed the world. You know, the question is, the only risks long-term, I think, for Uber's going to be fine long-term. It effectively changed the standard of how people travel short-term throughout the world, right? And so in that regard, it's powerful. Taxi companies don't like it, of course, so it created some enemies. But in that regard, it's powerful for Uber. The only big risks long-term for Uber, in my opinion, are if robotaxis and full self-driving become a thing. I don't know if people are going to use Uber in the same way. You know, so if the robotaxi event makes it big, you know, it could start to replace Uber. That's the risk, right? But the question is, when does that happen? I don't know when it happens. We'll see. What do you guys think? Yeah, that happens over time, Raven. You see it a lot with like Amazon, right? Like I used to sell used books on Amazon, right? Like I used to sell used books. It was a really profitable business for a long time, right? I would go to the thrift store. Like what I would do when I was young, this was when I was like early 20s, right? I would go to the thrift store, and I had a Bluetooth barcode scanner that I downloaded Amazon's entire database to my phone and to this Bluetooth barcode scanner. So I could literally go in a Goodwill or a thrift shop, and I could just scan every single barcode. And I programmed the scanner to jingle if a book was the lowest price for that book on Amazon used was over 20 bucks, right? So I would just scan. If I heard the jingle, I'd throw it in the cart, and I would resell it. I would buy it for like 50 cents. And then I would resell it on Amazon for like 20 bucks, right? Great margins, made a lot of money doing it, made thousands of dollars a month doing this. But any big platform over time takes more and more, right? And so at first, when I started doing it, Amazon would pay, sellers, let sellers keep most of their profit, right? Over time, Amazon started taking, 10%, eventually 20%, eventually 30%, and they would slowly just start chipping away at their profits. Amazon would also start to sell the books themselves. They would sell some of the products themselves, and then other sellers started to find out that you could do this, and saturation picked up really fast. Plus, it was a lot of work, but, thus was the end of my book selling career. Now I have this library of books that I don't ever read or use. Yeah, the cab companies obviously don't like them, but it's for the customer's best. Like, sure, some of the drivers get mad, but you pay much less in Uber than you do in a cab, right? You pay a cab, you're driving 20 miles, it's going to be like 90 bucks or something. Uber might be like 20, 30, whatever it is. So you save money with Uber for sure, and it's better for the customer, worse for the driver, I would say. Cab drivers make more than Uber drivers for sure. But you also have a lot more business as a Uber driver than you do a cab driver. So, Uber destroyed many lives. Yeah, but I mean, dude, cab drivers will deal with it. That's life, man. I guess in the end, if you're going to make your career being a cab driver, right, you got to understand that, like, it might not hold long term. It's a very easy career to get. You don't have to work super hard to be a cab driver. You got to get some licensing and some driving and all that stuff. I'm sure it's a very difficult, tough job to do with on a regular basis. But point is, if you're a cab driver, you have to understand, like, you're not going to be able to purely live off of just being a cab driver. You got to find something else, and that's life, right? The same thing with my bookstore. Like, businesses, change. Yeah, well, mail order shipping has taken over the world, right? So one of the things I look at Nvidia start to push up. Nvidia at 115s, chat 115s. Yeah, you gotta adapt. It's life. Yeah. Tesla will pop again, but it will be because of robotaxi, not its car sales. Its recent pump was just that. Tesla will probably go back under. Maybe, we'll see. You know, again, Elon Musk said in this last press release that, you know, he said that, you know, margins on the Cybertruck were not going to be good and beneficial to the company short term, that it would take a long-term amount to get margins effectively up for the Cybertruck. And that's kind of what we saw the last couple quarters, you know, and that's not a shock. EPS was low, revenue was still good, but EPS was low. So, I mean, you know, if the report comes out lower, is that a bad thing? No, so lower is better, higher is worse. This is inflation data. PCE is inflation, right? So this is actually the Fed's preferred inflation metric. This is how the Fed judges inflation. NVIDIA just broke highs of the day up over 115. But yeah, this is how the Fed judges and gauges inflation, right? So this is what the Fed looks at, what the Fed wants. All right, looking at our poll number here, 35% think higher, 35% think lower, 70% as expected, 14% say I don't know. Right, Uber's still not profitable, sure. If you look at Uber, right, here's Uber's EPS. Like, this is their margins. You know, they're getting better, right? So this is the trend right now. So they are getting a little bit better. Now, whether they hold this better, I don't know, but they are getting a little bit better, you know. They're at the point now where they're going to find ways to monetize, and monetization for something like them takes time. The infrastructure had to be built, and now that it's built, you know, it'll take time, but I think they'll be fine. Right, exactly, Truth, I agree. Is Airbnb taking over the motel biz? Honestly, I think it's a different... The motels and Airbnb are completely different markets. I don't know if anybody's ever stayed in an Airbnb here, but it's hella expensive. It's not cheap. It's a lot to stay at an Airbnb, right? Like, and they get you with marketing, right? So, like, an example of this is when I was in Michigan, we stayed at an Airbnb. And so this Airbnb was advertised to us at about $200 a night, right? Right? And that sounds great, right? My wife kept repeating it like, oh, this Airbnb was only $200 a night. But I'm the one that paid for it, and I'm here to tell you, it was not $200 a freaking night. In the end, when they add their Airbnb fees and their cleaning fees and everything like that, it was closer to $450 a night after fees. It was actually about $450 a night, right? Almost $500 a night for this Airbnb, right? But they advertise it without including the fees, and so you look at it and you're like, oh, $200 a night, that's what I pay at a hotel. It's not. You're paying double that, really, especially after fees and taxes and all this nonsense. You're paying at least double that, usually. And so that's the problem. Motels are cheap. Motels are $30 a night net, you know, so that's not competitive with this, right? This is just a different market. Now, maybe high-end hotels are going to compete with Airbnb. So, like, high-end hotels are going to be, you know, people are going to be looking at those for sure. But, I mean, I didn't get scammed. I stayed in a really cool cabin. We saw a lot of deer. It was a good experience, you know. All right, guys, NVIDIA shooting up. NVIDIA at 115s, Microsoft at 422s. We still got 45 minutes before PCE data drops. 45 minutes. Do me a favor, slap the like button as well, guys. Hit the subscribe button. Help grow the channel. Let's get over. Yeah. Again, NVIDIA over 115s. We have that previous high of the day of about 115.20. Vote on the poll. 35% think higher, 33% think lower. We still got about 45 minutes until this report drops, chat. So this is a big report. Big report. I saw a video making their own crypto. Maybe. Donuts? I can't eat a donut, bro. I get sick. Kroger's has this thing now. They run a grocery store out of a warehouse and deliver free. Yeah, Kroger's is great. Honestly, H-E-B does it as well. Whole Foods, I think you could do it too. But yeah, I mean, honestly, I didn't mind spending a couple nights at almost $500 a night just for the experience of the family, you know? I knew it was going to be expensive, but the point is, Airbnbs are super expensive, right? And so they're not as cheap as a lot of people think they are. And, you know, Airbnb, the fees and cleaning fees. Honestly, it was just a bad experience, though. Like, they asked me to tip the cleaning lady. They asked me to clean the house, basically. Like, if I'm spending $500 a night, they need to be cleaning up after me. They need to have cleaning people, all this good stuff. But it's not that. Like, they needed me to clean the house and put everything up and do the dishes and tip the cleaning lady. Like, the problem is, like, a lot of businesses run these Airbnbs, right? So a lot of businesses buy these Airbnbs, run these Airbnbs, and they do not care about the customer. They do not care. They just want margins. And so that's where you get them asking you to tip the cleaning lady, you know? And it's like, why am I spending $500 a night? It's because, you know, top 3 coins, maybe. Right, these are the reasons we need to freaking cut interest rates. Or no, this is the reason we don't need to cut interest rates. Right, for sure. If I'm spending $500, some of that has to include the cleaning lady fee. But, you know, it is what it is. Anyways, guys, Microsoft up there, SPY up there, NVIDIA up there. Look at everything start to bounce. Specifically NVIDIA and other microchips. Again, we do have AMD earnings next week. I am MU bouncing a lot back today too. We'll see what happens with MU. I'm gonna add a little bit more to my MU position, just a little bit. Yeah, keep rates higher for longer. I thought the Bitcoin conference was yesterday. You can hire a semi-mansion in Australia for that price. Not on Airbnb, you can't, bro. You know. Now, granted, this was a really cool place. This was like a cabin in the woods. We saw like 15 like deer the whole time we were there, like baby deer, adult deer. We'd get up in the morning, drink coffee, and there would be baby deers running around and all this kind of cool stuff. It was a really cool place. I streamed from there, right? So I could probably actually write it off as well, and I'll try to write it off because I did work from there. I did stream there, and so, you know, it's a business expense to a certain extent. I needed to go there for internet purposes as well because my mother-in-law's internet wasn't good. So I think I have a justifiable argument for business expense there too. So I'll probably write it off, but I digress back to the point. It was super expensive. Hey, thank you, Mike. Mike said, let's take a look at CRSR. Is that Corsair? Yeah, Corsair Gaming, they make like cheap computer gear. They've dropped a lot though, you know. I don't know what their margins are as well. Like, it really depends on their margins. Corsair, are they profitable? It doesn't look like they are, right? So they produce cheap mouses, keyboards, stuff like that. They struggle to find profits though. So I don't know I don't know enough about their business to really buy it. They are down a lot though, you know. But again, they've had losing quarters. When do their earnings drop? As well for Corsair. I appreciate the donation though, brother. Thank you. Earnings drop August 1st, so next week they come out with earnings. Yeah, I don't know enough. Maybe if they drop big from earnings, maybe I'll buy it. I don't think they're gonna go out of business. I think they're still gonna be around. But you know, I just don't know enough. Days in, $50 a night, no deer. Yeah. Also, crappy TV. Probably bed bugs, you know. So, I mean, pros and cons. I want to know what the expected says. Is the dollar going to be negative or positive? Please, someone who knows how to read the expected news, tell me. So this is inflation data, right? So I would probably say the higher PCE is, the more the dollar goes up, the Dixie, right? The lower PCE is, the more the dollar index goes down and the more the equities market moves up, is my guess. So if PCE comes in low, right? If it comes in low, the dollar goes down, right? The equities market, like the S&P, goes up, right? So if PCE comes in low, the Dixie goes down, the S&P moves up. All right. If PCE comes in higher, the Dixie goes up and the equities market goes down, right? This is probably the reactions that we're going to see. Okay, again, it's never for sure. It's never certain. We don't know for sure anything, what's going to happen there. We don't know anything. It might go up, it might go down, we might go sideways. We don't really know. But generally speaking, this is the reaction that we're going to get. PCE goes up, dollar index goes up, SPY goes down, S&P goes down, Q goes down, equities markets go down, Dow goes down, and vice versa. More spending is better for the dollar, right? So the more spending that happens, again, PCE goes up, dollar index is probably going to go up with it. But again, chat, if you think I'm wrong, tell me. It's okay. Corsair products are pretty cheap, I would say. They're like the cheaper products at like Best Buy or something. Joe, what do you think about buying Google right now? I bought some Google yesterday after earnings. So I added a little bit to my position yesterday, but time will tell. Big tech earnings next week are going to be influential. I might add a little bit more actually to it. But yeah, big tech earnings next week are going to be big. We'll watch to see what happens there. We're up really nicely today. There's snow. So we're in snow somehow. I think we added the snow last week. Snow up to 131.50s. So yeah, we added a little bit of snow last week. It's snow bounced back a good bit. We're still down on it though, but again, I'm just trying to wait. We got a big enough pullback for me to be interested in buying up some stuff here, but yeah. Venison? Yeah, so Meta, another one that we're basically flat on Meta. I think we went up a lot yesterday right after we bought it, and so we took some profit off. So yeah. All right, here's Nvidia pulling back to this level here. Here, we'll put Tesla up here. Tesla up to 224s. Nvidia again up to 115. The SPY is getting ready to try to break lifetime high. So this is the again, the SPY is the S&P 500. You guys ready? Again, hit the like button, hit the subscribe button, vote on the poll right now. Again, we got hundreds of votes. 37% think we're going to come in higher for PCE. If we look at the data here for PCE, right, the last PCE report showed up at the last PCE report showed up at 0.1% month to month, 0.1%. Today they're expecting 0.2% for core. Core is the big one. The other ones are small. Regular year-over-year core PCE last time showed up at 2.6%, and this time they're expecting the same reading at 2.6%. Last time 2.6%, this time they're expecting 2.6% as well. At 10 a.m. we also have Michigan consumer sentiment data. So, yeah. Celsius, yeah, again, I tried to tell people this not that long ago, but I didn't like Celsius. Somebody asked me about Celsius. Like, you remember, does anybody remember me talking about Celsius? Right, one of the things I consistently said with Celsius is that I don't trust it for a couple reasons. Number one, I don't trust Celsius because I watched Bang energy drinks crash. They got really, really big. Used to buy them at the gym. Everything was fine. Eventually, they got sued and they lost a bunch of money and interest fell for Bang energy drinks. Celsius, so much caffeine in them. A lot of competition in energy drink markets. And they're just really trendy, but they don't generally hold those trends, if that makes sense, you know. And so Celsius with a big fall, you know, dropped all the way from 100 down to 46 bucks a share. So yeah, this thing is down like 53.5%. That's a lot. That's a big drop. 53.5% is a significant drop. We'll see if we hold. Yeah, so Justin says yesterday was a bloodbath, talking about the 24th, but nothing was discussed here. Very strange. This raises a big question on the number of users. Yeah, my Discord's pretty much empty. We don't ever plug it or post it. Like, when was the last time you heard me plug my Discord? You know. And so, I mean, we're not really trying to build our Discord up, to be honest. We haven't really been posting it. Like, we got some old members that like to communicate in it, but, like, we don't ever really post anything here, you know. It's just not something that I'm focusing on right now. We're focusing on other stuff. You said the same thing about Lulu, John. I give you credit. Yeah, for sure. I mean, if there's one thing I can spot is overextension, right? Like, if there's one thing that I'm good at in the market, it's one of the reasons I've sometimes thought about opening up a short report, you know, and I'm not a big shorter, to be honest. I'm really not. I think maybe I should like turn to the dark side to a certain extent and try it, because there's been a couple stocks where I've been like a broken freaking record about, right? And I have been right about almost every single one, except for maybe like AT&T. I still think is in a downward trend, but like, I'll talk about them, right? Some of these stocks are Lululemon, of course, right? I've had people freaking try to tell me that investing long-term into Lululemon is some type of great investment. And again, I told him, no, it's not true. I told him Lululemon is a trendy company. Fashions change, generations change, interest changes. They got big during the pandemic because of leisure wear interest. Everybody's staying at home wearing sweatpants. And now that that's done, eventually that trend's going to change. And what happens to the Lululemon's up in the air. And with that said, I said this before this crash, when Lululemon was breaking highs. Since then, Lululemon has dropped well over 50%. Down massively. Again, trends change. Businesses change. I said this about Peloton, same kind of thing. Honestly, very similar story to Lululemon. You want to know why I didn't like Lululemon? Is because I didn't like Peloton. And Peloton is the same story. What's the story? Got really big, overhyped during the pandemic. Virtual reality bicycle company, selling them for thousands of dollars. Everybody was scared to go outside. And so they thrived, got really overextended to 170s. Never was going to hold. And again, whenever a company gets this big this quickly, they start burning money, right? They start burning money from this. How do they burn money? They started creating virtual reality rowing machines and a bunch of stuff that nobody asked for, right? Since then, they have lost tons and tons and tons of money, and now they've gone from $170 down to $345 a share. I'm not gonna say I told you guys so, but you know. Same thing with Beyond Meat. Same argument with Beyond Meat. You know, Beyond Meat got really, really big. Because everybody was overhyped up from their lab-grown meat, but nobody thought about it objectively. Nobody thought about what vegans actually want. No vegan wants to experiment by taking a bunch of lab-grown meat, especially if it's hella expensive like Beyond Meat is. You know, vegans are incredibly health sensitive, incredibly protective over their health. They're not going to be the guinea pig here. They're not going to experiment with lab-grown meat. And with that said, was super overhyped at 220s. And so I think there's a really good strategy of just looking for companies that have gotten overhyped and shorting them. You got to pick the right ones, right? I don't think Celsius is one of them, to be fair. I think Celsius is really, really a big company. A lot of people still use it regularly, even though it's down 50%. So maybe it's time to buy it. I don't know. But I'm not going to try to short Celsius. It's just not as easy as some of these companies that I mentioned here. With that said, SPY breaking highs. NVIDIA is testing the highs way up there. Who cares about vegans? The lab-grown meat company does, I promise. Tesla at 224.60s, chat. 224.60s. NVIDIA breaking highs. So is SPY. SPY just broke highs leading into this PCE report. Very big report, very relevant report here, chat. Yeah, I've tried Beyond Meat. They're okay. Honestly, they tasted good. I went to Disney World and tried the Impossible tacos. I love tacos, and they were good. I hate to admit it, but they were good, right? The problem is that you don't have enough people that are interested in actually buying it. So, like, yeah, you have it, and it's a product, and maybe you get some sales, but is it enough to justify $300 a share? Of course not. And so, finding overhyped up stocks, like, the reason I disagree with Cathie Wood in a lot of ways, right, is because Cathie Wood would take these stocks, like I just mentioned, similar stocks to like I just mentioned at least, and she would buy them up at the highs. And I'm sitting there like, these are the worst investments you can make. And so, but she's gotten a little bit better at buying dips instead. Like, she's kind of pivoted her strategy more similar to how I trade, which is like I buy big pullbacks, big dips now. You know. Anyways. Yeah, I did a poll. Would you rather have a bicycle or a virtual reality bicycle? And most people chose an actual bicycle over the virtual reality bike. Anyways, today we got PCE data, guys. Inflation data. Big report, big release. Be ready here, guys. NVIDIA churning up to 116s. 116s for NVIDIA. SPY up to 540s. Chat, we got 30 minutes left. 30 minutes before PCE inflation data comes out, guys. 30 minutes before it comes out. I'm in Honeywell right now. I don't know, man. Honeywell's down a lot. You know, I had good experiences with Honeywell. It's one of the reasons I originally bought them. My average price in Honeywell, though, was 180s. So, like, I have a good average in them. The reason I bought them up, we had a valve go out on our hot water heater back in my old house, right? It was a Honeywell valve that went out. Honeywell, and it leaked water all over my roof, caused a bunch of mold damage and like all kind of stuff, right? So we get the Honeywell guy out there, and they basically replace the hot water heater, give us a newer electric hot water heater, fix all the mold damage, repair the whole house for us, all for free, just because their valve went out. And so, good service for Honeywell, you know. And they're a big company, a lot of people use them. And so, with that said, you know, I bought the stock, and I made money on the stock. Again, average price is 180s. We've already taken a lot off of that position, though. I'm in SoFi right now. SoFi has earnings next Monday, right? I don't know what we're going to get with them. I don't know. All right, guys. PCE inflation data. Be ready, chat. Be ready. PCE data goes live. Wow. Dude, I think views for everybody are down a lot. It's interesting. Wow. Anyways, PCE data goes live, chat. NVIDIA down to 115s. Pull it back a little bit after breaking highs. The SPY up to 540s. John Easley, one of the best top 5 stock pickers of all time in the world right now, for sure. Definitely top 3-ish traders ever. Looking for beating down divvy stocks. You like Pfizer under 30? I'm in Pfizer already. Yeah, I mean, I'm basically completely flat on Pfizer. My average price is 30.18, and we're at 30.18. So I don't know about it. I'm not going to add more to it, though. I'm probably just going to sit in it. All right, guys. Hey, we got 25 minutes before inflation data comes out. 25 minutes. Be ready. All right, guys. So again, the SPY at 540s here, chat. 540s. Tesla at 224s, 225s. The real question is, do we get higher and lower PCE data? Looking at our poll, 37% think higher. Lesser think lower. question is Lululemon a buy right now? I'm thinking about buying it. All right, guys, you guys ready? What else do we got moving today? Again, I'm looking at Microsoft. I'm looking at some other news. Inflation data is going to be the big report, and then next week's the crazy big one, to be honest. So the U.S. SEC sues Andrew Left and Citron Capital over stock short sales, according to Bloomberg here. That's an interesting report. Nissan also has planned to cut production by a third at its top Japanese plant as it struggles with a weak U.S. demand, according to Reuters. Nissan, yeah, I mean, Nissan, the Skyline is cool, right? But I don't, like, the Z's are kind of cool, right? But they're not as cool as they could be. Salesforce, I'm in CRM, and CRM is a really nice trade of mine. I'm in CRM. I bought it a while ago. My average price is 224s for Salesforce. It is at 260s right now. So we are in Salesforce already, holding it. But yeah, look at this news. SEC sues Andrew Left and Citron Capital over stock short sales, according to Bloomberg. Still got about 30 minutes left, about 23 minutes left, chat. So we still got some time before PCE data. It's a wildly important, relevant, and influential report. So again, we'll see what happens. Chat, be ready. Hopefully we get something good, you know. All right, we're at 553s. Tesla back over 225s. Look at the volume. It's just been so light today leading up into everything. Look at the SPY volume. Is the Q volume much better? What do you guys prefer, the SPY or Q? Q volume looks a little bit better, but let's take a look at like volume here. Yeah, look at the volume decrease. We've had a lot of like, look at how weak the volume is. Look, here's August of last year. Look at how much lower the volume has been dropping everywhere here, which is interesting. What about the SPY? Let's look at the same thing on the SPY. Do we get a similar correlation to trend? Yeah, SPY volume's down a lot too. I mean, everything's kind of been pulling back, but SPY volume is dropping even with it's been pushing up. Please tell me to sell or buy. Please. Buy, sell. Buy, sell. Sell, buy. I don't know what you want me to say. Gold rally. Yeah, we're looking at gold. We'll see what happens for gold. Gold up to over 2,400. So gold has bounced back. And we're going to put gold up on the chart here as well. Just because it's relevant. There's gold at 24.22s. Gold has had a big, good year. It's been mostly flat, though, for months now since April. So, you know, March, April, May, June, July, August, basically sideways. Slight green trend. Like a slightly increasing trend. But yeah, only slight. Like, it's only slightly going up. It hasn't really had some crazy good trend like it used to. I don't know about PCE date. PCE is a little bit harder to gauge. I'm gonna guess 2.5%. Or wait, that's what's expected. Okay, core is expected at 2.6. I'm gonna go with 2.5% year over year. And 0.1% month to month. That's my guess. Purely a straight up guess. No freaking idea what's gonna happen here. Straight up guess. No freaking idea. Again, I'm gonna go with 2.5% year over year and 0.1% month to month for core PCE. For core, we'll see if we're right. But yeah, we'll see what the Dow does here. I'm not sure. We'll see what goes on with the Dow. Dow at 40.5K. Went as high as 40.7K yesterday. Again, SPY having a big dip. Nvidia up though. So we got to watch Nvidia here. All right, guys, we got 20 minutes, chat. 20 minutes. I'm looking at gold futures. So again, here's gold futures right here. I'm not sure what platform are you looking at gold price on, Phil? All right, guys, be ready. Let's do this. PCE data coming out soon. All right, guys, you guys get ready. Big dip. We got 20 minutes. Give me your predictions. Do we come in higher or lower than expected? Yeah, does PCE come in higher or lower, chat? What 3 charts would you rather me have up on screen? What 3 charts? Would you rather me have the Q, the SPY, gold, the Dixie, you know, the Dow? What do you want? S&P? NASDAQ? What do you guys want on screen? Higher, in line. Will Pfizer beat earnings? No idea. Higher, higher. Low PCE may rise shares. Yeah, low PCE is going to help the market, not hurt it. So yeah, lower PCE data is going to have a positive effect on markets, not lower. So SPY, Q, Bitcoin, gold in the SPY. Yeah, we got gold, SPY, and Nvidia up right now. So SPY, Tesla, Nvidia. Yeah, we're gonna keep Nvidia up. I'll probably keep gold up and maybe the SPY up. It's just whether you guys want the SPY or Q. I guess more people would probably rather watch the SPY, but it varies for sure. I'm gonna trade now, and I'm mad. News coming up. Got to close all down. Yeah, I mean, it's probably. I'm not saying you have to. You can do whatever you want to do. Volatility is gonna increase in about 20 minutes, though. So I would be very careful. You know, be very, very careful. Did PCE leak? No. We're probably up just because everything dropped so much yesterday, and the day before, and the day before, and the week before that. It's probably just time to rebound a little bit. It's the middle of summer, though. It's the middle of July. So, I mean. Yeah, so here's gold. Gold at 24.20s. Yeah, prelim GDP data. It's the advance estimate. So the advance estimate for GDP showed 2.8% versus like 2% expected, roughly. Like they expected about 2. So we'll see. For GDP, we'll see. I'm hoping we come in good, but again, time will tell. You know, lower is better for inflation data without question, guys. So lower is always better, higher is always worse. Still, though, everything's light. Volume is incredibly light right now, everywhere, you know. So, again, typically these are the slowest months in the market. The busiest months are like October, November, December, January. The slowest months are right now August, July. You know, the Russell. Yeah, I'm not gonna put the Russell up. I think we come in higher, get a spike up, and then dump for the rest of the day. Possible. You know, sometimes the first move is the wrong move in that regard. So, yeah, it's possible. We got over 15 minutes left, though, so we still got some time until it drops. Volume's down here at the bottom. If you want me to put this up. Volume's been very, very light, though. Like, again, if you want to see how much volume has decreased, like, stock market-wise, right? Like, look, so here's a weekly chart. So this looks at the last... Like, if you want to see how low volume is right now, it's probably because of an election year, I'm assuming, right? But, like, look at the difference here, okay? So this is the last 10 years of market activity. Can you guys see this? The stock market volume is, you know, you can't see it. So again, I'm going to put this up a little bit better so you can see it. Let me know if you would like, I think this might actually help you guys. Let me know if you would like this instead, like maybe like this. Yeah. So in here, I'll move myself over to. All right. So yeah, we'll put the timer up too. So yeah, there we go. That's probably better. So yeah, so look at the volume down here, right? So down here, look at the volume, right? This is the volume of the market over the last 10 years straight. 10 years straight. We are at the lowest volume the market has in a decade. Lowest volume the market has easily in a decade. Super high volume up here. Big spikes in 2020 and 2021. The volume of the stock market has decreased dramatically here. If we look at the Q is a little bit better though. You know, Q has gotten a little bit better. So Q is actually pushing up some. We're looking a little bit better on the Q, but the volume overall though has wildly increased over the last 3 years as well though. Look at the last 3 year period. You know, if we zoom in on the Q, right now it is seasonal. Seasonality plays a factor here for sure. But we got some spikes. We'll see if the Q holds, but volume's down on the Q overall too. So doesn't PCE pretty much follow CPI? Not necessarily. Yeah, Russell and small caps have had big runs the last like few weeks with the weakness that we've had in the S&P and the NASDAQ. Generally, there's an inverse correlation with those. You know. All right, guys. All right. You guys ready? July is normally a positive month. We haven't had a red July in 10 years, expecting to rip up at the end of the month. Yeah, but it's not going to be enough. There's no way we're going to go green, I don't think, this month. I mean, it's possible, but I think it's super unlikely. Like, look, so even if we look at the Q, right? So here's the beginning of July, right? There's no way. Not unless, like, we have a really, really good... here's the start of July right here. I mean, I guess we could, but the Q would have to move up a huge amount of points, right? So here's where let me close this out. So again, here's where we were at the beginning of the month right here. We would have to basically retrace all the way back up in the next week. Now, if there is a week where we could do this, it's next week, right? Next week, the month ends Wednesday. So, you know, Monday, Tuesday, and Wednesday, we got the JOLTS report. We've got Microsoft, AMD earnings. We've got the Fed decision. We got a lot of stuff happening. And so if there is a week where we're going to get that type of implied volatility, it's next week. But it's still kind of a crazy, crazy time. And markets are down a lot. So, you know, the likelihood that we resurge all the way back up, still, I would argue pretty low. But nonetheless, it's still like there's still a shot. You know, there's still a shot. Yeah, rate decision comes in on the 31st of July as well. So again, there's a shot. Again, we got the timer on the screen. We got about 10 minutes, a little bit over 10 minutes to be honest. The timer's a little bit early as it does, but yeah. S&P could finish green, needs just 0.7%. So yeah, this percentage-wise on the month for July, right? We are down. At least if we look at like the Q on the month. opened up at 480, so we are down to under 460. We're down from 480 on the Q down to 458, right? Yeah, we are down 4.5% on the month. So we would have to bounce back up essentially 5% to rebound on the month. I just don't think that's super probable. It could happen. I just don't think it's gonna happen. All right, guys, we got 700 people here live. We'll have well over 1,000 here when PCE drops. With the rate decision on the 31st could help or hurt it bad. Yeah, for sure. You think U.S. tech will tank its hardest today or Monday? I don't know. I think next week's such a big, busy week, right? So next week, just to put this into perspective, next week we have the JOLTS report, the Fed rate hike decision, huge earnings, non-farm payrolls, unemployment data. We've got non-farm employment change on Wednesday, the JOLTS report. Like, there's just so much stuff that drops next week. It's going to be crazy busy. You know, in all honesty, it's going to be crazy, crazy busy. All right, guys, we got 9 minutes left, chat. About 9 minutes left. Again, the Q has dipped a lot. Down from its highs, though. The Q is down from 504. And again, the reason down to 458. So the Q overall is down 9.1%, almost 10% drop in markets from highs. You know, over the last month or so, about 10% down in markets. So it's been a big, big correction. Now, whether we hold down is a different story. I think next week's going to be the week where if we do resurge, it's going to be next week. Yeah, the reason we get, 1,000+ people here for these big reports is because we cover it very, very quickly relative to everybody else. They can say they cover it fast. We cover it very, very quickly relative to everybody else. To be honest, though, right, I think the Microsoft CrowdStrike thing hurt. And I talked to a friend of mine that's on TikTok. They said their views are down as well, right? So everybody's views are down a lot. I'm looking at a lot of channels. Like, there's this Forex guy that I would sometimes watch. And he would start streaming much earlier than me, and he would have thousands and thousands of people watching him, right? Right now, I looked at him. He's got like 400 people watching him, right? So views are down a lot for everybody. It's strange, to be honest. It's genuinely strange. So after the CrowdStrike thing, and it could be just everybody's on vacation, but it's kind of weird, to be honest. It is kind of off. We still have 800 people here. We'll have well over 1,000, and again, it could just be summer slump. I know last year at around this time it was low too for everybody else, but my views have held up pretty well. To have 800 people here is still pretty solid. But it's just odd. I see a lot of other people that have had a lot worse than me, and it's just weird. How are you feeling today? Bullish or bearish? Yeah, I'm not. I don't know. I guess I'm bullish, but that might be confirmation bias. It might be just optimism. I hope we go up. I hope we go up. But who knows, man? Genuinely, who knows? Nobody knows for sure. I just hope I hope the market goes up. I always turn to you first, John. Hey, thank you, brother. I appreciate it. Well, no, honestly, my channel has been more resilient than a lot. My channel, we still got 800 people here, I've seen a lot of channels that have gotten hit way worse. So, I don't know if that means there's more bots on other channels and mine's more organic, which, hey, I appreciate you guys. Thanks so much here. Appreciate it, team. All right, guys, we need 6 minutes left. 6 minutes. We do have Michigan consumer sentiment also today as well. Chad, so we do have University of Michigan consumer sentiment. NVIDIA bouncing back up some. I'm going to put the SPY back up here as well. The Q's still up there. So there's the SPY at 540s. 540s. Yeah, I'm flat in day trading right now. I'm not going to be pushing too heavy into anything else either. I'm waiting for this report to drop without question. Waiting for this report. I think we're getting rate cut next week. I don't think we're going to get rate cuts. I don't think it's leaked either. Every major economic report, every major economic report we get somebody saying that the data is somehow leaked and that the data is out and it's leaked and all this stuff. It never is. You honestly, again, I've said this 1,000 times, but the people will always throw out a number. They'll be like, "Yeah, the PCE data's leaked, guys, and the number came in at 2.4%." You know, I would say 2.7%. They'll make it some really high number, really low number to try to scare people or boost the market up. But they're always wrong, right? Everybody that says they're leaked and they give out a specific number, they're always wrong. Now, we'll see. Again, if data comes in super low, maybe. But again, my guess for PCE today, 2.5% year over year for core PCE, 0.1% month to month for core PCE. That's my guess, straight up guess, right? Straight up guess. John, I like what you have done for the channel. Great context. Hey, thank you, brother. Low PCE means lower inflation data and better strength for indexes. Higher means higher inflation data, more pessimism, less optimism, and probably negative reactions in stocks and equities, right? I think rate cuts in December, yes. I think we need to wait as long as we possibly can to cut rates. I think if we cut rates too early, there's going to be a lot of problems in markets, and I think we're going to have a lot of inflation problems and spikes and risks and issues with inflation if we cut rates too early. And so at least I hope we don't cut rates. I genuinely hope that we can maintain high rates for as long as possible to really push down inflation like we need to. Like, inflation needs to go down, and I think yeah. So I think we need to keep interest rates as high as we can for as long as we can. I think a lot of people are kind of mirroring, or they're kind of parroting back what lenders say, and lenders will say, "Oh, guys, you know, rates being high is what's hurting you." I'm telling you, rates being high is helping you right now. We need lower inflation. The real reason people are unhappy is because inflation spiked up 10% a few years ago and prices don't go back down. And so if you think you're unhappy now, if we cut rates to pander to lenders, because lenders thrive in a low interest rate environment, if we cut rates to pander to them, inflation's going to spike again, and then you're going to be really unhappy. If you think you're mad now, imagine if prices spiked up even more in a big way. You're going to be super upset. So again, just be ready, chat. Understand. All right, we got about 1,000 people here live. I'm going to throw this in sub-only mode as well. So if you have not already, hit the subscribe button, hit the notification bell. I appreciate it. Thanks so much. This data wildly affects markets. PCE is the Fed's preferred inflation metric, and with the Fed decision next week, this is a crazy big report, a very relevant, crazy big report. So we'll see, guys. We got a couple minutes left. This is a little bit early this timer, so again, we got a couple minutes left. Be ready. Inflation data drops very soon in a couple minutes, chat. Let's do this. Again, we got 40 seconds, 40 seconds. Expectations, again, 2.5% for core year over year. This is expecting a 2.5% rise to inflation year over year. Month to month is expected to rise 0.2% for core. Core is the big one, chat. Core is the big inflationary report. Yeah, core is the big one. 2.5% year over year is what expected for core. Higher is worse, lower is better. 0.2% month to month for regular. Yeah, this will influence potential rate decisions. We got a minute left, chat. Minute left. This is a little bit early, guys. So my timer's a little bit early. We got 1 minute left. Less than a minute, about 50 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. Be ready here. We got 40 seconds. $30 seconds, chat. Hit the live button next to the play button. You guys ready? Whew, all right. Here we go. 10 seconds, chat. 10 seconds. Let's see if we get this. I've got all mine up on the screen. 5 seconds. And there's the report. Waiting for it. Everything's underwhelming, not reacting yet because the report hasn't dropped yet. They're late. All right, there it goes. PCE came out at 2.6%. 2.6% year to year, slightly higher than expected for PCE, 0.2% on the month. It looks like the market hasn't really hit it yet. Again, slightly higher than expected. This is basically neutral. It came in at 2.6% versus 2.5% expected. Core PCE came in at 0.2%. Neutral reading, guys, basically a completely neutral reading. 0.2% is basically what it showed year over year. Base CPI came in at 2.5% and 0.1% month to month. Almost everything has showed up as expected. Almost everything showed up exactly as expected. It's also a little bit late, which is interesting too. But yeah, PCE data again, guys, showed up as expected almost universally. The only thing that showed up higher than expected is the year-over-year PCE reading, slightly higher. Again, this signals less of a need to cut rates. We should not cut rates with slightly higher inflation. If inflation's not going down, we should not cut rates. This does not signal a necessary rate cut. This signals more need to combat inflation and keep interest rates high. We need to keep this high interest rate environment. We should not cut rates, and PCE data confirms this. Again, PCE came in at 0.2% versus 0.1% expected for core month to month. Regular PCE came in at 2.6 versus 2.5% month to month. Wait, I'm showing a different reading. Hold on. Okay, well, yeah, this one has 0.1% expected, so a little bit different analysts expected. Market hasn't moved at all on this PCE report, which is even more interesting, right? Like, we've had almost no move from this PCE report. Very strange. Almost no reaction to this PCE report. Core PCE price index month to month came in at 0.2 versus 0.1. Virtually no reaction here. Really interesting, chat. Really interesting. Essentially nothing happened just now. Basically nothing happened. Again, we're waiting for it, chat. We're waiting for it. But this is basically no reaction. Core PC month to month 0.2 versus 0.1. Regular PC 0.1 versus 0.1. Yeah, so again, the whole market's apprehensive right now. Like, we're in a very apprehensive market, it looks like, relative. Like, and again, I've day traded, swing traded, and invested and covered stock market movement for years. You know, I appreciate us having 1,400 people here right now. Thank you guys so much. But again, like, I have covered the stock market, the economy, economic reports for years. This is one of the most underwhelming reactions to PCE data that I've seen, to be honest. Like, we are basically completely flat from this report. We haven't moved much at all. And the report came in essentially neutral. So I guess that's not too much of a shock. But it was slightly worse than expected. So to be completely honest, I expected more of a drop from this report. Because what does this signal here, guys? Like, what does this signal here? This signals less of a need to cut rates, more of a need to keep a high interest rate environment, push push inflation down. You know, if inflation's not going down, we should not cut rates. But we haven't really had any response here. Again, I expect the market to correct a little bit more. I think it's just taking a little bit of time. I think we might come back down some here. What do you guys think? Let me end this poll, and we're going to ask a completely other poll. You know, we're going to put this other news release up here. But yeah, let's end this poll here, and let's ask. Yeah, this is one of the least, like, the most underwhelming reactions I've seen. Does the market, after slightly higher than expected core PCE data, should we cut rates next week? Yes, no? Vote on the poll. After slightly higher than expected inflation data, should we cut rates next week? Basically is what we're asking in our poll. I believe we absolutely should not. I think that's going to make the market and the economy much worse. I believe that the Fed is going to get a lot of pressure from politicians to cut, but I do not believe we should. I think we need to keep rates as high as we can for as long as we absolutely can. Nice strong reading the last 2 days with nothing too crazy high. Only thing that matters now, interpretation by the Fed. And hopefully the Fed interprets it like he should, which is that inflation's not quite under control. It's not going down. It's still at 2.6% for PCE inflation. Still well above their target. And because of that, we need to maintain a high interest rate environment, I'm hoping here. But again, next week we have, let's see if the odds and probabilities changed here. Also, guys, check out Apex. If you want to help support the channel, check out Apex. Apex is a funded account program in futures. They give you a demo in futures. They test your skill with a demo account. If you pass the test with the demo account, they fund you with a regular account between 25K up to 300K. If you want to day trade, this is the cheapest way. Most day traders lose. I think most day traders will probably lose here as well. It's a lot cheaper to lose on Apex than it is to put up 5K and lose that. Most day traders lose. Limit your risk. Learn how to trade. It teaches you how to trade under pressure as well. You know, you're risking something. You're just not risking 5K like most new day traders do. And if you're a good trader, you could take this exam, pass the test. If you pass it, you get between 25K up to 300K in funding with a 90% split. So once you're funded, you're keeping most of your profit anyway, and you can get the 25K, 150, 250, 300K challenges, all for the same price, 35 to 40 bucks if you use my coupon code and link. Great way to learn how to day trade. Very limited risk. But if you're good enough to pass it, you can take withdrawals from them, and they pay out millions. They funded and withdrawed thousands of traders. They paid out over $250 million, I think, to their traders. Although they are a sponsor of mine, they pay me money. So I'm biased because they pay me money. Check all of this with them first. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. But you can use my coupon code BT, beginner trading. Yeah, so again, I'm kind of short biased in this market, and I actually might short the SPY here. We'll see. So I'm kind of short biased here. We got a little bit worse inflation data. Now, the market is extended heavily on the downside, though. So, you know, it's not really a... But I don't mind shorting, 100 shares here of the SPY and see what happens with a little trade. And then maybe holding this throughout the rest of the day. We'll see how this goes. I think they should cut in September. Yeah, if we look at the actual probabilities here, chat. So if we look at the Fed watch tool, right? This is the probabilities of rate cuts right now. So this is the probabilities of rate cuts. 93.3% of people still expecting that we're going to pause in September, right? 93.3% of people are still expecting a pause in September. Or no, I'm sorry, in July. So next week, 93% of people are expecting that we're not going to cut rates. As they should, because I don't think we should cut rates. Unless Powell does something outside of expected, I don't think we should cut rates. About 7% of people are expecting a rate cut. If we look into September, this changes dramatically, right? So we're at currently 525 to 550 for the Fed funds rate percentage. I'm going to take a quarter of this off just to lock it in. Anyways, so again, currently we're at 525 to 550 for the Fed funds rate. All right. In September, there is not even an option for pauses. So basically, everybody and their grandmother thinks that we're going to cut rates. 90% of people think we're going to do a 25 basis point base cut. 10% of people think we're going to do a 10% of people think we're going to do a 50 basis point cut. And then 0.3% of people think we're going to do a 75 basis point cut. So just to show you guys the likelihood of rate cuts, it's possible we do cut rates next week. It's not super likely, although we got a 7% chance, which is not nothing. It's much, much, much more probable that we are going to cut rates September. And I think all I can really do here is hope it's in September. I just do not want us to cut rates early and destroy inflation in the economy in that way, right? Like, if we cut rates too early, it is going to cause snowballs in inflation prices. And honestly, bro, if the Fed ends up cutting rates and inflation snowballs, I'm gonna be here to tell you I told you so. And again, if that's the case, you can blame lenders, because lenders are the ones pushing for rate cuts when we shouldn't be right now. They're trying to pretend like they're trying to pretend like the economy is just in some disaster zone, and so we should just cut rates, and it's not, right? People are working, people are spending. The reason unemployment is low is because people have to work multiple jobs to afford things, because inflation has gone up so freaking much. And so, yeah, I'm here to say let's not cut rates. Yeah, I mean, a couple rate cuts is not spiking inflation at this point. It might. If interest rates drop down back to 4%, 3%, what do you think is going to happen? What do you think is going to happen? What's the obvious reaction is that people are going to start spending a lot more. And when people start spending a lot more because of cheap lending, prices are very obviously going to spike, you know? Now, even like, we'll see. But yeah. The main issue is government spending, not rate cuts. Well, I mean, again, and I'm for us staying in the current quantitative tightening market that we're currently in. I'm going to go ahead and cut this trade. You know, we had higher than expected inflation data, so like I'll wait, I guess. Nvidia spiking up. We'll give it a little bit of time, but if it spikes up too much, we're just going to cut it and lick our wounds here. But yeah. If we can maintain the quantitative tightening position that we're in, like the problem is this, okay? The last FOMC meeting, maybe the one before that, Powell talked about slowing down our quantitative tightening. You know, what does that mean? You know, that's a lot of big words that a lot of people might not know and understand. Quantitative tightening is the opposite of money printing. You know, quantitative tightening is a reduction in the Fed's balance sheet, which takes liquidity away from markets instead of injecting liquidity into markets, and thus helps banks to keep interest rate, or forces banks to keep interest rates high. That's what quantitative tightening does. And so if we start slowing down that quantitative tightening, that reduction in the Fed's balance sheet, the consequence is going to be interest rates dropping as well, right? All of these things contributing to more spending, and if spending spikes, inflation is going to spike. I just think, like, people have to understand inflation can snowball, and there's a domino effect of it, where inflation can get worse really, really, really fast. Right? And once that happens, again, we're getting very close to like being unsustainable with how much prices have gone up already. A lot of people would argue that prices are not sustainable right now. You know, a lot of people are going to argue that prices are simply not sustainable right now. The problem I have with cutting rates too early is that might exacerbate that problem. It might make it much worse, you know. Yeah, Jackson Hole in a couple weeks is going to be major. So again, we're pulling back down. I shorted the market on this little bounce. Small little trade. We're going to trade futures live at the opening bell pretty soon as well. So stick around. All right, so we're going to take a little bit more off. We cut it. We're at these lows, so I'm going to take a little bit more off. We'll hold the rest. Little day trade here. Gold up $7. Yeah, gold is moving up a lot. Nvidia is actually moving up as well. And then the Q, or no, I'm in the SPY. The SPY broke that low, which is good for my short position here. Yeah, and like I think the biggest thing right now, chat, like the biggest thing that everybody should be paying attention to, like with prices spiking up and prices being unsustainable and a lot of people pushing and arguing for rate cuts, real estate prices having been up 60% plus over the last 5 years, the question you have to ask yourself is pandering to real estate. There's two questions, right? Is pandering to real estate by lowering interest rates the right decision, right? What's the consequence of lowering interest rates to try to help real estate, right? The consequence is more people spend. When more people spend, what happens? Prices go up, all right? Number one. Number two, if you don't hit the like and subscribe button, you're a terrible person. I hate you for life, you know? It's all love here. I hate you forever if you don't hit the like button. Do it now. Try it one time. Right. The problem if we lower interest rates is that prices in real estate are going to go higher, not lower. And it's just going to make things worse. Yeah, for sure, Larry. Yeah, but I think, okay, so like here's the problem, okay? Real estate prices overall have gone like this. over there. Like commercial, I'm talking about commercial. Real estate prices have gone like this. This is their graph over the last 5 years. Okay. The problem is that really what's needed is this, right? Really, that's what's needed, you know? But if we lower interest rates, what do you think is going to happen? Instead of getting that, like, we're going to get something like this, you know? And again, if you think you got trouble paying your rent now, if you're mad about rent prices rising, if you're mad about all this stuff, it's just going to get worse, you know? Now, sure, you'll be able to afford a cheaper mortgage. And so if you do want to buy things, you're going to be able to afford a mortgage a little bit more. But, you know, I don't know. Hey, what's up, Slick Rick? I appreciate you, brother. Thank you, man. We'll see. Disney back up a little bit today. I am biased, but I love interest rate cuts so my long-term bonds can go up. I'm in short-term bonds, and so I'm okay with the inverted yield. You know, if you don't know what the yield curve inversion means, here's a good example, right? Right now, my T-bill position. And this is just, like, this isn't that, like, they usually use a little bit longer term, like short-term treasuries are usually like 2 years as opposed to 10 years. But I'm going to use my little 1 to 3 month T-bill position, you know, 3 month treasury bill position. Currently paying about 5% right now. Short-term bonds and treasury bills currently paying about 5%, right? If we look at something like, let me see, what is a 10-year? What's the symbol for the 10-year yield? US 10-year. What's the TNX? Is that it? TNX? No. Somebody give me the yield on a 10-year yield in futures. TNX. I'm trying to look at TNX. I don't know if we're frozen or what. Can you guys hear me? Okay, there we go. Oh, I think I gotta do. Okay. Yeah, that's working. Okay, so anyways, the point is, the 10-year yield right now, usually it's TNX, actually, I'm sorry, I forgot to do this. There it is. So here's the 10-year yield. You move a decimal place over. 10-year yield currently paying 4.225%. So 4.23% roughly on average, right? And so the problem here is that this is a 3-month treasury bill, short term, right here. This is a 3-month yield, so it's paying me 5% annualized. And again, I've got a lot of, like, if you look at my position here, they pay me a monthly dividend check. I've got 1,400 shares of this, about 70 grand in this right now, paying me about 5%. And so long term, this is 10 years. It's paying me noticeably less, which is opposite. This is a microcosm of the yield curve inversion. It's not the exact ones that they use, but like this is the yield curve inversion, where you hear people say, "Oh no, the yield curve is inverted. The yield curve is inverted." What do they mean by that? They mean short-term bonds like the 3-month, or really they use like the 2-year, are paying much more than long-term bonds. Long-term bonds should pay a higher yield. Why should they pay a higher yield for long-term bonds? Because inflation is going to happen over that long period of time. Inflation is going to go up. Inflation is going to get worse and worse. And so in theory, long-term bonds should pay more than short-term bonds, but not right now. Not during the inverted curve that we have. Okay, good. Yeah, I was trying to make sure lag didn't hurt me or whatever. Yeah. So the real one they use, here's the 10-year. What's the 2-year? 2-year, 2-year, 10-year, 2-year. What's a 2-year? Whatever. What are 2-year? I'll just ask Google. 2-year treasury bonds right now are paying about 4.4%. Okay, so again, I'm making 5% on my 3-month bonds. And so again, I'm just making much more on my short-term bonds. So why in the world would anybody ever lock their money up for longer for less interest right now? right? Like, why in the world would anybody ever do that? Nobody's going to want to do that. Everybody's going to say, hey, I'm just going to invest in short-term treasuries right now. I can buy certified deposits. I can buy treasury bonds. I can buy all this different stuff. And ultimately, I am going to save. I'm going to make more money than I would if I, buy long-term treasury bonds. And again, at 5%, just to show you the math behind this trade. Again, if you look at my position here, I've got about 1,400. I've got about 1,400 T-bill positions here. So 1,400 times about $50 each is about 70K. So right, they are paying every month, once a month, I get a dividend payment put into my account from T-bill, this T-bill position. And so they are paying me about 5% annualized here. So they're going to be paying me about yearly, I'm going to be making about $3,500 from this T-bill position. Monthly, they're going to be paying me about $291 or so, about $291. So I'm making about $300 a month deposited into my account by just letting my money sit here. And this is the problem. Okay, like, here's the real issue, is that maybe I say that too much. Maybe I say this is the real issue too much. A big issue for a lot of people is, let me rephrase that. A big issue for a lot of people is that I know a lot of people that just sit on cash. They sit on cash. They don't do anything with it. They're just kind of sitting on it. They don't trust the stock market, and they're not financially educated enough to understand how to at least grow their money a little bit for themselves. So they sit on large chunks of cash that don't do anything, and they lose boatloads of money long term because of inflation prices, right? They just lose tons of money from inflation. Like, this is a guaranteed return. It's liquid. I can sell T-bill whenever I want to sell it and get my money back, and so I can sell T-bill whenever I want to sell it. It's very, very liquid. There's virtually no risk to doing it. I'm going to get $300. I'm going to get 5% annualized deposited into my account, no matter what, and I can cut it, sell it, liquidate it whenever I need to do it, and it's going to be very easy for me to do so, right? And so why would you ever sit on cash as opposed to just leaving your money sitting in this? It just makes no sense, chat. And so again, if you're one of those stubborn people that just sits on boatloads of cash without doing anything with it, you're losing money long term. Like, you might as well earn thousands of dollars a year letting your money sit, lock up, earn it through treasury bonds. You can do it with certified deposits as well. If you don't know what a certified deposit is, a CD is what it's abbreviated to. A certified deposit just means a bank will pay you X amount if you open up an account with them and let your money sit in their bank. Okay, so a CD, like, you can shop around and 5 CDs right now that are paying 5%, 4.5%, 5%, 6%. And so they might pay you 8 months at 5% annualized. And so you got to let your money sit in that bank for 8 months. You'll make 5% annualized. So 5% times 0.8, whatever that is. Or no, not 0.8. 8 months. Yeah, whatever the percentage is. But yeah, the point is, don't sit on cash. It doesn't do anything for you. It doesn't grow. Cuts will have to wait until September. Most likely cuts are going to happen in September. We don't know for sure. Bro, why don't you just throw that 70K in NVIDIA? Because it's the risk of NVIDIA, like, and again, just to put this into perspective, right? Like, we have a portfolio that's very big. So 70K is roughly like half of my portfolio, right? So I'm not gonna, like, I don't invest everything into stocks. The other thing though is, like, okay, on average, if I invest money, and I try to go over this at least once a week, just so for people at home can really understand, like, investing, the edge, all that good stuff. If I have $100,000 and I buy the S&P 500 on average, right, it's gonna earn me about 10% a year, annualized, 10%. Over a 10-year period, that 100K over 10 years, if I invested in the S&P, on average, in general, it's not guaranteed. It's not like bonds, it's not like T-bill, which is guaranteed by the U.S. government. On average, it's going to make me 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That 100K is going to turn into about 268. Did I do it too much? Let me see. Hold on. I might have extra clicked. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. No, I did it right. Okay, so yeah, you're going to earn about $260,000 from that $100,000 investment in the S&P 500. And so the gains that you make investing in something like the S&P or the SPY here are going to, in general, usually trump any gains that I make in treasury bonds, right? With that, it depends on whether you need your liquidity now. Whether you need your money now, I mean. If you need your money now, it's really risky. I always tell people the way you have to look at this is, do you need to retire imminently? If you're older and you need to retire soon, investing into the S&P 500 might not be the option that you want. Because why? Why is that a larger risk? Because the likelihood that you're going to go into a long-term, like a 5+ year bear market is there. You know, so if you need your money, say you invest 100K and the stock market drops 30% in a flash crash or a bear market, you're losing 30 grand, you know? And if you don't have the time heals all the wounds in the stock market eventually. But if you don't have the time to let it sit and you need your money now, say you're retiring imminently, that's where the risk is in the S&P 500. If you can hold it indefinitely, if you're going to let it sit for decades, then it doesn't matter. You put your money in the S&P and you just let it work over time. So it all depends on your specific situation. You know, bonds are good. Mostly, I'm a big believer in diversification. So I've got some money sitting in bonds. I've got some money sitting in S&P. I've got some money sitting in real estate, some money sitting in crypto. And over time, that is a powerful portfolio because it's protected. No matter what happens in any individual sector, you know, you put some money in gold and precious metals, you're usually okay. All right, guys. Yeah, I mean, I'm not really considering 140K big. What I'm saying is that it's a lot bigger than 70K, you know? And so if I'm investing 70K in treasury bills, I've had some people that are like, oh, well, your whole portfolio is in treasury bills. And so, no, it's not. I'm not trying to act like 100K is big or anything like that. I mean, I think it's larger than most people. But, like, you know, again, like, you think making $2,000 is a lot until you meet somebody that makes 10. You think somebody that makes $10,000 is a lot until you meet somebody that's making 30. You think somebody that makes 30K a lot a month is big until you meet somebody that makes 100. You think 100K a month is a lot until you meet somebody that makes $1 million. You know, so there's levels. It's all relative. Yeah, not financial advice. I have no idea what you should do, and nothing's guaranteed except for treasury bonds, I guess. Yeah, crashes are unlikely. They're rare. They only happen about once every decade or two, and usually they don't last very long is the big thing behind them. So, like, usually crashes only last, I would say, like, crashes typically only last maybe a year or two before the market flies back. And the people that lose the most in those type of crashes are people who get emotional and sell early. So, you know, yeah, I think you got to look at it from that perspective. Again, every couple decades, you'll get a long-term bear market. The last long-term bear market we had was 2000, which was 25 years ago. You know, 99, 2000. That was the biggest one. Like, so. Yeah. All right. All right, guys, get ready. We're going to be day trading at the opening bell live like we always have been. Do me a favor, hit that subscribe button if you haven't already. Hit the notification bell. I appreciate it. Again, we're going to be day trading live on stream today. So yeah, we're going to day trade futures today, chat. Let me know what you guys think we're going to get at the opening bell. We're going to redirect to this futures day trading stream, so you won't have to go anywhere. It should automatically immediately bring you to the... yeah, it should automatically bring you to the day trading stream. If it doesn't, for whatever reason, I'll put the link up in chat so you guys can check it out. Let me save this, make sure redirect is working. Pretty sure it is. So redirect will be working, chat. And so yeah, stick around. We're gonna be day trading futures. Again, don't go anywhere. As soon as we close this, it should immediately bring you to the day trading futures stream. Again, if you guys want to keep hanging out with me, we're gonna go to the crypto stream day trading live. So I'll see you guys over there. Again, we're going to be going to the day trading stream right now. It should immediately bring you over there. If it doesn't, for whatever reason, go to this link right here. This link will bring you right to the day trading stream. And yeah, I'll see you guys over there. Let's do this.